Good morning, folks. I hope you are well, and welcome to this morning's video. I hope you had a great weekend. I do apologize in advance. We seem to have some crazy feedback on the recording this morning. I've tried to get rid of it, but for some reason it persists. So it is what it is. Okay, so we seem to have a little bit of commitment in the market at the moment, a little bit more impulsive momentum coming in. And the two pairs that I have on watch today are Aussie dollar and Aussie CAD. So on Aussie dollar, which is my favorite of the bunch, you can see that we had this very, very bearish weekly candle last week. Okay, we have that break above this area. We've broken back down, and you can see we well and truly closed back below all of these highs and an area of significance on the daily chart, which I'll discuss in a second. Okay, so it seems logical to me that the sellers would be getting out of their positions likely around this area, many of them. Okay, and there's a target which I'm looking to target here for a potential move today on this pair. If we just zoom down, you can see one of the things I like about this is that the weekly candle closed with almost no wick below it at all, suggesting no buying pressure where this candle is concerned. You can see here, okay, as I said, we had a series of near misses to here. If you just look at this on the 4 hour, I think it was. I'm just going to touch on this briefly. You can see here we do have a series of near misses to here. So many of these people would have had their stop losses above this high here, but also all of these are near misses to here. And the reason this is significant is because we have a sharp move suggesting a lot of liquidity came in at that area in a very short period of time. But this exchange of liquidity also was the one that caused price to smash through this low, and also to some extent this low as well. So there must have been a big exchange of liquidity there, okay, for price to smash through all of those lows. And the other clue that it was a attractive area of value was the fact that we kept near missing to it here multiple times, okay? And all I'm seeing this as is people being caught the wrong side of the market, okay? So many people, as I said, many people that were in the buy positions hold this out of greed because they see it get to these highs, but they think, what if it keeps going? It then breaks above. Okay, many people start buying. You can tell, as I've said before, with the exception of this one candle here, look at the size of these candles. That is usually not what I've noticed is, excuse me, what I've noticed is when people get themselves caught the wrong side of the market, it tends to be these low momentum candles. I said that in a previous video. Low momentum. Even when we have this impulse correction continuation, the momentum is low momentum candles, with the exception of just that one candle there. That tells me that this is the amateurs getting themselves caught the wrong side of the market, and what I'm anticipating is this. Okay, and that's exactly what we got. Okay. Something else I was going to touch on. Yeah, that's what it was. So we also have to remember, so we do have this, okay? If we just measure that. Okay, we've not yet fulfilled that move. So this could be, because we also have this as well, right? So because we have this, I don't know why the paintbrush tool still isn't working, but we have this impulse correction potential continuation, which would take us up to that area if the impulses were of a similar length. This may be a shorter term move, let's say down to here, for example, or maybe down to here, to push back up, to take out that high, okay, to complete that 1, 2, 3, okay, and then we end up with that kind of structure, perhaps. I'm not seeing that at the minute, but that could be a possibility. But it's quite clear to me that we are in a run of momentum. We've caught people the wrong side of the market, okay? We're trading back below all of these highs. It seems logical to me that a move to the downside to take out at least this low here would be likely, okay? What was the daily like? Let's just zoom back out to the daily. You can see here we've had a little bit of more indecisive price action there, but that doesn't surprise me. Many people would have thought this was a retest to get long, which is probably why you saw the wick. They start to get long and then they get completely washed out. And you can see some pretty heavy momentum coming into the downside there, or that came in the last few days of last week. Okay, so on the 4-hour chart, you can see that we've already had an impulse correction continuation. There's a little bit of pattern separating that you can do here to actually make sense of the structure. Okay, so if we go right down, so the sequence isn't the greatest because it started with this kind of move there like that. Okay, we would expect to see tighter consolidations and not something like this, but that does happen sometimes. So we have this little structure here. Okay, I'm going to do this on the 15-minute chart because it's actually, from what I recall, it's actually a bit easier to separate the structures a little bit. We have this little structure here. Okay, price comes down. Price breaks through the low. Okay, let me just zoom in here so you can see what I'm doing. Price leaves a little bit of a footprint. Okay, so we have this here. It breaks the low, leaves a bit of a footprint. We keep near missing to that. That's likely where the stop losses were. If we're near missing to it, especially if it's the retest of the previous low, we come down, we come back up in the form of a 1, 2, 3 with a middle section. We tap into this little high, which was the retest of the back end of that, which all of these highs kept near missing to, and then we move to the downside. Okay. We then have a bit of a scoop here. So this is called pattern separation. I'm separating the structures. We come, so we take out all that liquidity. We leave a little bit of a footprint there. We come down. Price wicks below. Okay, we come back up. What are we near missing to? Near miss to that high. We have this little reversal structure there. We tap into it. Then we push to the downside. We then have a little 3-touch structure there. Little middle section. We move to the downside. Okay, here. So I'm just doing this just because I've got a little bit more time. Okay. We have this here. We have this structure here. Price comes down. We don't always get all the way to the high. In this case, we didn't. Okay. Price comes back up. It breaks this structure, leaves a footprint. We come down. And then we have this little scoop there. We have these near misses there. The stop losses are likely been placed there. So we come back out. We take out all we break above these highs and tap into the area that we keep near missing to. We move to the downside. What happens? We come back up. We leave a bit of a footprint, which just happens to be the retest of that. We near miss to that area. Okay, we come back up, tap into the high that we near missed to, and move to the downside. Are you noticing a pattern here, folks? What are we doing here? We have this tight consolidation here. We break to the downside impulsively. We come back up. We leave a footprint, which just happens to be more or less the retest of the back end of that. So this is likely where price will gravitate back towards. This is called pattern separation. And I'm just going to get all that off my chart, seeing as I've made a complete mess of my screen of my charts. So what I'm going to be looking for today, so this is where structures can turn into larger versions of themselves, because we are quite far down now in terms of this run. So in such instances, I only wait for a 1-hour structure. So that's a minimum of 6 to 8 corrective 1-hour candles. And I only look for a risk entry within the structure, just in case price. Let's just show you what I'm looking for first. So I'll be looking for something like this. Okay. And I only look for the risk entry within the structure. And all that does is it mitigates the chance of something like this breaking the low, coming back up, and then forming, let's say, a larger version of itself like that. And then, of course, if your entry is there, you can't get your risk off the table if this was to form. Whereas if you look for a risk entry within the structure and price breaks the low and starts to do something like that, then, of course, you can see if your entry price is there, you've got enough room to get your risk off the table if that were to occur. Okay, so what I'm looking for is I'm looking for a 3-touch 1-hour continuation, as it says there, or a 2-touch 1-hour continuation with a 3-touch structural approach. And then I would drop to the 15-minute chart to look for an entry, a rejection from those highs. And in this instance, I will be able to place my stop loss above the low of the previous structure, okay, above the low of that structure there. So I'll be able to protect my stop loss. And I would be targeting this low here, where I think that there would likely be a bit of profit taken. And you also have to consider as well that even though this is the low of all of this consolidation, okay, the question I ask myself is, would a tight correction like this have enough volume to take it all the way to that low? In my experience, the answer is no, the majority of the times. So what this might be is a short-term move, because if we measure the impulse there, okay, and we assume that the continuation leg out is of a similar length, that would take us down to there. If we measured it from the break, mathematically, that lines up with that low. Okay, so what I would do in this instance, okay, normally I'm measuring the range, so there to there, and I'm setting a take profit at the 90% area where price can pull back deeply, even if it does continue in the forecasted direction. But since I only use that mechanical management, I only set the take profit at the 90% area if I've got a 5-to-1 minimum to work with. What I would do is I would actually, in this instance, just set the take profit at that low, which just so happens to be a sharp move. Okay, and one which this low near miss 2, which might be where there's liquidity. Okay, so I would set the take profit there, and I would trail my stop loss for something in the region of 5.5%. It would be quite easy with Aussie dollar, as it usually is, to get a 10 pip stop losses, to get a 10 pip stop loss, which is the minimum we go to. And I've got an alert set just below, because I forgot to touch on this. We have the sharp move there. Okay, so that I've got an alert set just below them. Okay, just to see if we do something like that. And if we tap slightly above and then push down and we reject the back end of that as well, that would be even better. And then I would look to get short. So that is Aussie dollar. Okay, as I said, we've got some momentum coming into the market now. So it doesn't necessarily mean you're going to get an entry. Sometimes you have to pattern separate to make sense of things, but we may get a little bit of some entries shaping up very shortly. So Aussie CAD is a similar deal. Okay, I just prefer Aussie dollar, partly just because it's just usually a bit more direct. Yeah, just flicking back there. So Aussie CAD, it's a very similar deal. You can see, in some respects, I actually like the fact that you can see the weekly on this, whereas if you just look at Aussie dollar, yeah, the area that we've tapped, well, we've still trading back below there, but what I like about Aussie CAD is the fact that we've actually broken above something that you can see on the weekly. We are trading back below the previous high there, just as we are with Aussie dollar. Okay, there's something else I wanted to touch on while it's come to mind. That structure which I just showed you on Aussie dollar. Okay, if we just flick to the DXY, you can see that the DXY has broken this low, which this low near missed 2. Okay, we broke below, caught people the wrong side of the market, and we've pushed up, right? If you just analyze this structure here, what do we have? We have this little footprint there. We have a near miss. If we get that, okay, so let's say price does something like that. We come down, we tap into that by way of a 1, 2, 3, which taps into that and then goes. That in itself might give, that would mean a DXY strength, dollar strength. So if we got that, the dollar would go long, which would likely give the time that would take to form, would likely give Aussie dollar the time to form this before it moves to the downside. So if the DXY starts to go long after that consolidation, then Aussie dollar is likely going short, okay, which would likely mean that Aussie CAD would do something similar. But you can see on Aussie CAD, I've only got 5 minutes left, 6 minutes left. So we had the very bearish weekly close with, once again, with very little wick below it. We broke just above here, caught people the wrong side of the market, and we closed back below this high. Okay, we have that 1, 2, 3 structure there with the middle section 1, 2, 3. Okay, I like the fact that on the fly we are trading back below this consolidation here. Okay, we've had some follow through with some decent momentum. Once again, it's a similar deal. we just separate this. I actually prefer the sequence slightly on this one on Aussie CAD, because we started off the move with that, with a tight correction into slightly larger tight correction. We then have this structure here, which just about taps into that, kind of near misses it actually, but I think there was a footprint here. We just analyze this. Yeah, so we have a bit of a footprint there, which this high near missed to, and we tap into, we break above this area of consolidation by way of the 1, 2, 3, and then we move to the downside. Okay, we have the tight consolidation on the low there. Okay, this little structure, little footprint, we near miss to the footprint. Okay, come back up in the form of a 1, 2, 3, middle section, break the low, come back up and scoop back up to tap into this high. Okay, there's a bit more to break down with this one, but we have a little area of consolidation there. We near miss to it there. Tap into that by way of this structure, move to the downside, tight consolidation underneath. The reason we get these tight consolidations underneath is because price doesn't need to build as much volume for it to move to the downside, because of all the volume that's been built up here. Okay, so you often see these little tight consolidations on the break or running just through the larger consolidations, and then you get the big drop. And then what happens? Price comes back up, it leaves a footprint. So what I'm looking for in this instance, if we just move all that mess off the chart, I'm looking for the same thing as I was looking for with okay, my forecast has vanished. There it is. Right, there we go. It's over there. So I'm looking for the same thing again, and I would likely be able to protect my stop loss just above the low there. Okay, so if we got something like that, I'd put my stop loss would be above there. And in my experience, if we broke above the low, that one there, if we started coming back up to test this high, then this is likely something a bit more complex, which may give us something like that. Tap into that area, and so my stop loss would be well protected. It would be, my stop loss would be above where the invalidation criteria would likely be, and in my experience that would be the back end of that, because if we push any higher than that, as I said, we're likely forming something more complex. And then, just as with Aussie dollar, I would be targeting this low here, okay, for something in the region, it's borderline, but for a 5-to-1, I would set the take profit there, and I would trail my stop loss accordingly, especially because we have a near miss to these two lows, okay, where there's likely orders underneath, especially since we have this structure, and this low was the retest of the back end of this structure, which broke to the upside. Okay, so that makes contextual sense for a short-term move to target that low, especially since a consolidation such as this, a 1-hour consolidation, would likely not have the volume to come all the way down to there. We would likely need to build volume along the way for a move like that to occur. So that is Aussie dollar and Aussie CAD. I hope you've enjoyed the thought process and the little bit of pattern separation that I've tried to do, just to to give you an idea of the thought process and what pattern separation is. That would be my first target, because we have, just to touch on it, we have that low there, which this low near missed to. It's also a sharp move, and it's also the retest in the back end of that. So that would be where I would look to get my risk off of the table. And that is what I'm looking for today, folks. Hope you've enjoyed this video. As I say, this pattern separation stuff, that took me a long time to learn, and I'm still improving at that. But hopefully you enjoyed this video, and hopefully it's changed your perspective or encouraged you to start pattern separating or looking at the market a little bit differently yourself. Okay, but for now, have a great day, and I'll see you again in the next video, and I'll speak to you again soon.